Hey everyone, welcome back. My name is Shane and this is Monument. Today we're going to have a look at the Apple stock, currently sitting at $179. That's with a market cap of 2.94 trillion. Apple is inching closer and closer to the 3 trillion market cap, which is just insane because it was less than 2 years ago that Apple was announced as the first $1 trillion company. Suddenly, they are now 3 times as valuable. So that's what we're here to understand. Question is, if Apple actually gets to this $3 trillion market cap, will they split their stocks again? Because if they do this, then obviously it'll just halve. The price of the shares will cut in half, but the supply of the shares will obviously double. And it's already just a huge amount of shares, 16.4 billion shares outstanding to be exact. That's just crazy. Not to mention 16.39 billion that are in public float. Now 58.8% is held by the institutions. And as of November the 29th of this year, there's been 112.6 shares that were shorted, Apple shares that were shorted. That's just crazy. And obviously the short percentage is 1.4%. That's crazy still. So yes, I do believe that Apple will split their shares again. Once again, they do love to have their share price just hovering just around $100, maybe $80, $90, $100. They do like that price mark. While other companies such as Amazon, they prefer to just leave their shares to go to insane heights such as 3,400 per share. While Apple do like to keep their shares more approachable for people to invest in, so people are not overwhelmed with a big price, because not a lot of people understand the stocks and shares market. Some people just want to invest because they think that it's a good company and they don't really want to do any more research. But it's always crucial to do more research. Speaking of doing research, obviously this video is not financial advice. This video is strictly for entertainment purposes and for educational purposes. And you have to do your own research before making financial decision or consult a professional. Now, one of the biggest investors in Apple is Warren Buffett's Berkshire Hathaway. And this was crucial for Warren Buffett because he actually invested in Apple not too long ago. He invested in Apple around 2016, which is just around 5 years ago. Doesn't sound like it's a long time, but it's actually 5 years, half a decade. That's crazy. But what's even more insane is that the amount of money Berkshire Hathaway has earned since becoming a Apple shareholder. It's absolutely crazy, and they currently own over 887.1 million shares in Apple. Obviously, Warren Buffett company, they do have a lot of other companies in their portfolios, such as Bank of America, Coca-Cola, one of Warren Buffett's most notorious, longest investment, and one of his most proudest investments. Verizon, American Express, Bank of New York Mellon, Kroger, General Motors, which is 60 million shares. It's quite interesting to see Warren Buffett invest in a company such as General Motors, because they're a manufacturer of, and the reason I say this is because Warren Buffett has not taken up the opportunity, the unique opportunity, a company such as Tesla. Not just Tesla, but there's other electric car companies as well that are popping up all over the place. But what I've noticed is that Warren Buffett tends to invest in companies that have proven themselves to be not just a strong brand, but an extremely good leadership, such as, and you can't deny that about Apple because they've been excelling for so many years. You see, Warren Buffett isn't the type of investor who just invests in a good idea because it's a new startup and they're doing something good, new, and exciting. He doesn't just invest based on fantasy. He invests based on real world results when a company has proven themselves. And in 2016, it was quite obvious that Apple spent years on years proving themselves that they're the clear leader in the smartphone market. Since then, Apple has created the best selling watch in the entire world. They've got the best phones, they've got the best laptops, they're excelling in a lot of different areas. But most importantly is that people just love to spend money on Apple. which puts them in a really unique situation. Warren Buffett loves to invest in companies that have a constant cash flow, such as insurance company. They have money constantly coming in because people sign up to insurance company and they pay on a regular basis. Therefore, the company doesn't have to predict its income. It actually knows its income before that income is actually generated, which is a really unique thing to be in, because not a lot of companies can guarantee an income, but insurance companies, they tend to do pretty well in that area. Now, I do have a very unique infographic explainer to explain Warren Buffett's portfolio and the Berkshire Hathaway portfolio as well. What's really unique is that one of the biggest earner in Berkshire Hathaway earning is insurance, as I've been saying before. Warren Buffett and his company Berkshire Hathaway, they love insurance companies because they have a constant inflow of cash. They also love banks. Banks also have a constant inflow of cash because that's where everyone puts their money. Not just that, banks also offer other alternative services such as loans, housing insurance, mortgages, the list goes on. Banks also have a constant inflow of cash. One, because we get paid into our banks by our employees, by our employers. Another is because we pay our banks. Another because we pay our banks depending on which subscription we sign up to, such as insurance, phone insurance, house insurance, mortgages, all sorts of stuff. Not to mention, whenever you take out a loan or a new car on finance, when you think you're paying the company, you're actually paying the bank, because that loan that paid for your car was actually paid by the bank, and who you're actually paying back is in actuality a bank. It might not be directly to the bank, but it's actually going into the hands of the bank. Either way, banks always have a positive cash flow income constantly. And Berkshire Hathaway and Warren Buffett, they love these streams of income. There's two major things that Warren Buffett loves in his investment companies. There's a company that has a strong brand that people just instantly fall in love with, and people are just instantly, for various different reasons. One of those companies is obviously Apple. Apple as a brand is a very strong brand. In the world of technology, Apple is basically Nike in the world of shoes and trainers and sneakers. In the world of sneakers, Nike are one of the most popular brands, probably the best brand for anyone choosing a sneaker. Instantly, it's Nike or Adidas. It's the same thing for Warren Buffett. He looks at companies that people choose instantly, such as Coca-Cola, McDonald's. Although he doesn't actually invest in McDonald's, but McDonald's is just my personal example. Now, Warren Buffett is probably the best known buy and hold investor out there. His forte is certainly not to time entries and exit, but to bet on above average companies at a reasonable price and stay put over a multi-year or multi-decade period. Having said this, don't think that Berkshire would never sell shares in one of its largest position. Apple itself is an example. In Q4 of last year, the conglomerate sold $7.4 billion worth of Apple stocks, effectively reducing the Apple allocation to 43% from 48% in a matter of 6 months. That the trim did not mean that Berkshire had become less bullish on Apple. At the turn of the year, keep in mind that Warren Buffett is generally very diligent about price and value, and Apple stocks have had clearly climbed 50% in second half of 2020 alone. That was quite incredible. When these top investors such as Warren Buffett or Cathie Wood, ARK Invest, when they sell shares, it doesn't mean that they don't believe in a company anymore. They simply are selling because they're making money. It's about making money short term, and it's also about making money long term. Cathie Wood also sells Tesla shares from time to time. But the important thing is that she believes in this company, and her company believes in this company above all else. Tesla is their biggest bet, perhaps even their biggest investment, but they do sell Tesla shares from time to time, and that's because they're making money. They're in the making money game, the investment game, making money short term as well as long term. And to make money short term, you have to sell sometimes, and to make money long term, you have to hold for a much longer period and then sell. Investors do this, Cathie Wood being one of them. Warren Buffett being one of them. Very smart people. You can't deny that. Now, obviously, this video is mostly about Apple, but I wanted to dive into the importance of what Apple means for investors, such as Warren Buffett, bigger investors out there who invest in Apple, and what these big investors, what they do to generate money in various mysterious ways. Obviously, one of the biggest thing in recent years is that Apple has been working on a car. That's been in and out of the news for years now, well over 5 years. It's been in the news for a very long time. Constant rumors that Apple could be working on a car. And sometimes these rumors are a bit washed out, but sometimes they revive out of thin air and they just take the world by storm. I don't think this has anything to do with the fact that Apple is getting close to $3 trillion market cap. That's purely because Apple is just insanely valuable in the eyes of people who are constantly spending thousands of US dollars or thousands of pounds or euros on their products. Never has there been a company where people are just happy to spend thousands of dollars on and brag about it at the same time. And a company that's actually becoming very similar to Apple is Tesla. People are actually really happy and spending a lot of money on Teslas, an insane amount of money on Teslas within the Tesla ecosystem and the Tesla company. And Tesla itself and Elon Musk is starting to realize this, that they have an insanely strong brand. And their branding power, they're going to use this to their advantage, just like Apple has done. And overall, I think this is a great thing. While there's been rumors that Apple is working on a car, there's been rumors that Tesla is working on a smartphone. And I think that's just brilliant because Tesla technology is really good. Their self-driving technology, their vehicle's computer, the actual computer screen that have their OS, they design these things, they manufacture these things, they deploy these things with regular updates. Their technology is extremely good. And I think if anyone stands a chance of competing against Apple, it's definitely Tesla in the technology space. It's definitely Tesla in the operating system space. But not to mention, who has a great chance of creating an operating system and its own app store? I thought the answer would have been Samsung, but Samsung hasn't been very ambitious on that front. But I actually believe that Tesla, if they wanted to do this, compete against Apple, yeah, I definitely think they can. But the thing about Tesla is that they're so focused on basically saving the planet, propelling the future towards electrifying the world. That's their main goal and main mission. So building a smartphone is extremely low on their list of important things to do. They have so much more important things to focus on. But I still think a smartphone is generally a good idea for Tesla. So there you have it, some information on Apple, some information on Warren Buffett, Cathie Wood, investing, and just how important it's going to be for the world and these big investors that Apple does become a $3 trillion company. It's going to be intense and crazy. But thank you for watching, subscribe, and of course I will see you in my next video.